Right now, the average mortgage rate is sitting around 6.3% to 6.5% in 2026. That's more than double what buyers were paying just a few years ago. And yet, home prices haven't crashed. So what's really happening? Is this a frozen market, or a hidden opportunity? Let's rewind. In 2020-2021, mortgage rates dropped below 3%, triggering one of the biggest housing booms in history. Fast forward to today, and we're in a completely different world. Mortgage rates peaked near 7.7% in 2023, and even though they've eased slightly, they're still hovering above 6%. That's why millions of homeowners are not selling. They're locked into ultra-low rates, creating a supply bottleneck. Now here's where the shift begins. Inventory is rising, but slowly. In early 2026, housing inventory growth dropped to about 10% year over year, down from over 30% previously. Price cuts are increasing. Nearly 1 in 3 homes, around 34%, are seeing price reductions in 2026. Some markets are correcting fast. In cities like Phoenix and Tampa, up to 20 to 28% of listings have cut prices. But nationally, prices aren't crashing. Home prices are still expected to grow just 1% to 2% in 2026. This isn't a collapse, it's a cooling phase. So what does this mean for you? You finally have negotiation power. With over 30% of homes cutting prices, sellers are adjusting expectations. Affordability is still tight. The average monthly payment on a home is now over $2,100, more than double pre-pandemic levels. But income is catching up. In 2026, affordability is improving slightly as wages grow faster than home prices. The market is splitting. Some areas are declining, others still growing, meaning opportunity depends on where you buy. But don't get it wrong, this market still has risks. Some forecasts even suggest a slight price decline of around 0.6% in certain scenarios. And if rates stay high, demand could weaken further. So the smart strategy: focus on monthly affordability, target markets with real price corrections. Negotiate hard, because sellers are already adjusting. Think long-term, not short-term speculation, because 2026 rewards discipline, not hype. Here's the truth: 2026 is not a crash. It's not a boom. It's the first balanced housing market in years. And for buyers who understand the data, this could be the best entry point we've seen since before the pandemic. Subscribe now, because understanding markets like this is how you stay ahead.